Let's talk about Chipotle Mexican Grill, CMG, a name synonymous with fresh ingredients and customizable dining. The company that redefined fast food, elevating it beyond the typical burger and fries experience. They carved out a unique space in the culinary landscape. They took fresh, customizable burritos packed with flavor and made to order right in front of you, and made it a nationwide obsession. From coast to coast, people lined up to experience the Chipotle difference. Their food with integrity promise set them apart, emphasizing ethically sourced and sustainable ingredients, making fast food feel healthy and premium. It wasn't just about convenience, it was about conscious consumption. From one Denver shop in 1993, a humble beginning that sparked a culinary revolution, to thousands of locations spanning across the nation and beyond. Chipotle's growth is legendary, a testament to their innovative approach and unwavering commitment to quality. They bounced back from food safety scares, demonstrating resilience and a dedication to regaining customer trust. Doubled down on tech, embracing digital ordering and enhancing the customer experience through technology. And rolled out Chipotlanes, drive-thrus that changed the game, offering convenience without sacrificing quality. The secret? Flawless execution. From sourcing ingredients to preparing meals, every step is carefully orchestrated. You see the fresh ingredients, you call the shots, and you get a meal made your way. It's all about personalization and control. It's more than food. It's an experience people crave, a ritual that satisfies both hunger and a desire for customization. Brand loyalty is their superpower, fueled by consistent quality and a connection with their customer base, turning customers into lifelong fans. They've cultivated a community of Chipotle enthusiasts. Chipotle isn't slowing down, they are constantly evolving and pushing boundaries. New stores, expanding their reach and bringing the Chipotle experience to new communities, new menu items, experimenting with flavors and catering to diverse palates, and global expansion are all on the menu. They are setting their sights on conquering the world, one burrito at a time. CEO Brian Niccol keeps them on offense, always innovating and driving the company forward with a clear vision. That's why Chipotle is one of the most exciting, dynamic, and closely watched growth stories in America. A true American success story built on fresh ingredients and customer loyalty. Booyah! Now let's talk numbers, because hype means nothing without results. Chipotle's revenue growth is consistently double-digit, even as competitors struggle. Same-store sales are surging, showing real organic demand. Their digital sales and Chipotlanes are driving efficiency and higher spending per visit. Profits, margins are expanding, and they're raising prices without losing customers. This financial strength gives them a fortress balance sheet and the cash to keep growing. They don't need to borrow, they're self-funding and in control. The financials show a company with momentum and muscle. From an investor's perspective, Chipotle is a financial all-star. It's a thing of beauty. But let's be real, the economic landscape is shifting beneath our feet. Costs are rising fast, impacting businesses across the board. We're seeing inflationary pressures that haven't been this intense in decades. Ingredient prices, especially avocados, are becoming a major pain point for restaurants. Beef, a staple in many dishes, and cheese, another essential ingredient, are experiencing significant price volatility and are generally climbing upwards. Chipotle faces a tough choice: how to navigate these financial headwinds, absorb costs potentially impacting their profit margins, or raise menu prices, risking alienating customers. Push prices too high and they risk losing customers to more affordable options. Customer loyalty can be fragile in these times. Labor is another big challenge. Finding and retaining skilled staff is becoming increasingly difficult. Higher wages and benefits are essential for attracting and retaining staff. But they inevitably squeeze profits, creating a delicate balancing act. Rent, utilities, and tech costs, including software and online ordering platforms, are all up too, adding to the financial strain. Every part of the business, from supply chain to operations, is under pressure from inflation, creating a complex web of challenges. So far, management's handled it well, demonstrating resilience and adaptability, but it's a daily battle, requiring constant vigilance and strategic adjustments. Efficiency is key to protecting those margins, streamlining operations, and minimizing waste. Rising costs are the biggest threat to Chipotle's bottom line, potentially impacting profitability and future growth. Investors need to watch this closely, paying attention to how Chipotle navigates these economic challenges. Don't forget it, the coming quarters will be crucial in determining Chipotle's long-term success. So, Chipotle's a great company, but is the stock a buy? Here's the catch. The stock is priced for perfection, with a sky-high P/E ratio. You're paying double or more compared to McDonald's or Starbucks. Wall Street expects flawless growth for years. Any slip, and the stock could tumble. At these prices, you're buying years of future success up front. There's no margin of safety. If Chipotle only does great instead of amazing, the stock could fall. For the price to go higher, they need to keep smashing expectations every quarter. That's a tough ask, even for the best. The risk-reward just isn't in your favor right now. Let's talk about Chipotle. It's a brand that's become synonymous with quality and fresh ingredients. They've built a loyal following, and their business model has proven to be incredibly successful. With a brand people genuinely love and crave. The food is delicious, the experience is consistent, and that's a powerful combination. But here's the thing, the stock price has surged, and it's way ahead of what the company's current financial performance justifies. When we analyze the underlying business, it's clear that Chipotle is an A-plus performer. But when we look at the stock's valuation, it paints a different picture. Currently, it earns a D. It's easy to get caught up in the hype, especially when you're a fan of their food, but don't let your love for burritos cloud your investment judgment. My advice is simple, don't chase the stock at these elevated levels. The risk-reward ratio isn't favorable right now. If you're already holding shares, consider trimming your position and taking some profits off the table. It's always wise to rebalance your portfolio, and if you're on the sidelines itching to get in, exercise patience. Wait for a pullback in the stock price, let the market correct itself. Remember, great companies almost always give you a second chance to buy in at a more attractive valuation. For now, put Chipotle on your watch list. Continue to study the company's story, its growth prospects, and its competitive landscape. And most importantly, wait for the valuation to cool off and become more reasonable. Then, and only then, consider nibbling and initiating a small position. Until that opportunity arises, keep your powder dry and your capital ready. Love the company, love the food, but wait patiently for a better price before you invest.